Good evening, you're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Tesla just a few talks away from making an electrifying entry into India. Promises not just world-class cars but a whole electric ecosystem. Looks to make India an export hub for Asia Pacific and Africa. Tata Motors share powers to another 52-week high as it declares a net profit of 3,203 crore rupees in April to June against a loss of 5,007 crore a year ago. Revenues also jumped 42% on year. Operating margin zooms by 700 basis points to 14.4%. Stock markets end flat after volatile trade. Gains in metals and auto stocks offset by selling in banking, FMCG and IT. Sensex in the red while Nifty closes in the green just about. Interest rates could soften by as much as 25 basis points in the next few quarters. PNB Housing Finance MD and CEO tells us in an exclusive chat, also says realty sector is on a rebound. More trouble for Byju's as it's now slammed by one of its largest shareholders. Netherlands-based Prosus says the EdTech company repeatedly ignored advice from its nominee director. Electric car giant Tesla is cranking up for a mega entry into India. Senior officials from the company will soon be meeting Commerce and Industry Minister Piyush Goyal to reportedly finalize the contours of the investment and operations. Business Today TV is privy to some of the plans. Here's a report.
You could soon be driving a made-in-India Tesla. Charging your electric car at a Tesla-installed charger and even riding an Indian-made Tesla on your leisure trip to Vietnam. Fresh from rebranding Twitter, Elon Musk is now all set to disrupt the electric car market in Asia. Having successfully cleared the homologation stage for all 4 vehicle variants it sought approval for in 2021, Tesla is likely to begin operations in India with either the Model 3 or Model Y. There are also reports of Tesla introducing an all-new model in the 20 lakh rupee range to cater to the price-sensitive Indian market. Sources have told Business Today TV that the electric vehicle giant has set its sight on creating a major export hub in India, with a plan to target the Asian, Pacific and African markets. While the exact location is yet to be finalized, sources indicate that Tesla is looking at potential sites in Southern India and Gujarat. An initial proposal submitted by the company reveals ambitious plans to construct a gigafactory in India. The state-of-the-art facility will have an annual production capacity of approximately 500,000 electric vehicles, one to rival the Tesla China plant in Shanghai, which has been hit by hurdles in its efforts to expand capacity to 450,000 units a year. The big development comes just a month after Elon Musk met Prime Minister Narendra Modi in New York.
India has more promise than any large country in the world.
Tesla's expansion goes beyond manufacturing operations. Sources say that the company is aiming to establish a comprehensive charging infrastructure throughout the country, addressing one of the key concerns for the widespread adoption of electric vehicles.
He really cares about India because he's pushing us to make significant investments in India, which it is something that we intend to do, and we're just trying to figure out the right timing.
Our iron base.
Interestingly, Musk had detailed his greater investment vision for India, for the energy sector, after his talks with Prime Minister Modi.
Well, I think there's a tremendous amount of potential for all 3 pillars of the sustainable energy future. The three pillars being sustainable energy generation through solar and wind primarily, and obviously India is great for solar. The amount of land area you actually need to generate enough electricity to power India is very small. I believe it'd be probably 1 or 2% of the land area of India. So it's very doable. And then you need to pair that with stationary battery packs because the sun doesn't shine at night. And then you need electric vehicles, and then you have a sustainable energy future. And I think it will, the interesting thing people will find is that this is a lower cost way to go as well.
Well, it's not been an easy journey for Tesla in India. It wanted a red carpet welcome and huge financial incentives. But Modi government had other plans. It wanted Tesla to come make in India for the world. And after years of stalemate, Tesla could soon finally start making in India. Well, a crucial round of talks is scheduled between Tesla representatives and Commerce Ministry. With Karabas and Sanjeev, this is Chetan Bhutani for Business Today TV.
A little over 24 hours ago, SEBI chairperson Madhvi Puri Butch announced the regulator was exploring instantaneous settlement of trades on the bourses. Besides this, the regulator is looking at reviewing the delisting regulations to ensure better price discovery. SEBI chairperson also announced that it will move to T+1 settlement cycle for all kinds of scripts from the 1st of October. My colleague Sakshi Batra spoke to market analyst Himang Jani about the significance of these measures and how they impact the small investor.
Last evening, we heard the SEBI chairperson make a slew of announcements which will impact the way, investors trade and they get the transactions done. Let's talk about all of these developments and help all our viewers really understand what do they actually mean for them as an investor and for the markets at large as well. So SEBI did announce that it will move to a T+1 settlement cycle for all scripts effective October 1st, 2023. This means that the trades will be settled one day after the date of the trade instead of the current 2-day settlement cycle, and this will be extended to mutual funds as well. Could you explain this further? Is this a path-breaking move? How will this really help the end investor?
Actually, T+1 is already implemented. Now what SEBI is talking about is an instantaneous settlement. The moment you do the transaction, it will get settled immediately, and with UPI framework being in place, the SEBI is trying to see if we can move towards an instant kind of a settlement, part. And we think that this can be very big in terms of reform because it can actually do away with the current margining system. Because currently, when you try to do some transaction on the exchange, you have to pay a certain upfront margin. And T+1 is surely a little better, but when you do instant transaction or settlement, that reduces the lag even by less than one more day. So I think for sure it will bring about more efficiency in the system. The money flow will be much faster, and I think the participation also will improve. So I think these are path-breaking reforms, and the speed at which SEBI is implementing or trying to implement is surely quite positive.
Okay. The other thing that SEBI chairperson announced was as far as the delisting process is concerned, to simplify that process. The regulator noted that the process of exiting the stock markets has to be made simpler going forward from here. They've now thought about allowing companies to delist via fixed price as well. If you could break that down for all those companies that are listed on the exchanges, how will this really impact them?
Sakshi, currently, there was this reverse book building process for the companies which were looking to delist their stock. And this process was slightly complex and, maybe few large investors could actually influence that. And I do remember that in few cases like Linde, for instance, the stock price was about 800 or thereabouts, and some large investors had put in a bid of more than 2,000 rupees and the promoter then backed out. And the whole delisting did not go through. And because there are a large number of investors, sometimes the price at which they quote varies, and there are instances where the delisting does not go through successfully. So I think the SEBI is trying to make it more simpler, and if there is a fixed price mechanism, maybe that would be a little easier for everybody to look at, and maybe the success ratio could be better. Okay. So we think that surely it's a positive step by SEBI for the companies who are trying to delist their stocks.
Equity markets settled flat, almost unchanged today after a volatile trading session. Selling pressure in select heavyweights was offset by buying interest in metal and auto counters. Traders are keenly awaiting the US Fed's monetary policy outcome due late tomorrow night. Let's take a look at how we fared for the day. It was really a session to do with consolidation. No major gains or losses today. Major gainers in trade. Let's take a look at that list. Earnings season in full swing. We saw some of the metal names in action today. Hindalco, JSW Steel, Tata Steel, and then we had Ultratech and NTPC bring up that list. On the downside, Asian Paints, ITC, L&T, Britannia and Kotak Mahindra Bank taking a breather. Trading in GIFT Nifty derivatives on NSE International Exchange hit a record high on Monday with more than 2.14 lakh contracts and a turnover of $8.5 billion being traded. This is a huge growth over the first day full-scale operations volume of 33,570 contracts with a turnover of $1.21 billion. Importantly, the figure is considerably higher than the 60,884 future contracts in the first 5 trading days in April, May and June traded on the Singapore exchange before its shift to Gujarat. Since trading began in India, GIFT Nifty has witnessed a total cumulative volume of nearly 7.87 lakh contracts and a turnover of $30.28 billion. GIFT Nifty offers access to GIFT Nifty 50, Nifty Bank, GIFT Nifty Financial Services and GIFT Nifty IT derivative contracts on the NSE IX. Meanwhile, with the markets taking a break after the recent rally and small correction, investors are also looking at options outside the country. My colleague Shailendra Bhatnagar spoke to Prateek Oswal, head passive funds at Motilal Oswal AMC, about the global diversification in equities.
International funds are a relatively new segment that we've seen flourishing very well in India. How do you see their growth over a period of time? And why is it that initially we have international funds that are focused mainly on the US markets? Of course, newer ones are looking at the Asian geography too.
Yeah, I think the thesis comes from, portfolio theory. I think if you look at most investors outside of India, so if you look at investors in the UK or the US or even Southeast Asia, you'll see that a lot of their portfolio is devoted towards companies and stocks outside their home country. And I think in India, this was not the case. But I think today, people have realized that a part of your portfolio should be exposed towards stocks and sectors and companies outside of your home country. And what we've seen in the US markets in the last 10 years, 15 years, I think the potential to wealth creation is very, very high. I think I do believe that, yes, US is 60% of global GDP market cap. So I think international investing is a category. The first obvious market that you can look for is the US market because you're looking at the biggest market, also a very fast-growing market. The second thing to why I think US markets are important is because it's one market where you have global business models. If at just the S&P 500, which is the top 500 companies in the US, about 60%, 55 to 60% of their sales is actually happening outside the US. So I think when you're looking at global investing, you want to buy global stocks. And the center, the exchange or the country which holds the most amount of globally diversified business models happens to be the US, which is why I think US tends to be the first category. And now obviously, once you have the US in your portfolio, I think it makes sense to add, say, emerging markets or developed markets. But I think US tends to be the most popular because of how well diversified its capital markets are.
When you look at international funds, and share this with our viewers, that there is an additional kicker that these funds get, because traditionally we've seen the rupee depreciate definitely versus the US dollar, as also weaken against several other currencies. So there is a kicker involved apart from the fantastic return that the underlying index already gives. Please explain that.
Yeah, so buying international equity, you're actually buying not one but two asset classes. You're buying, US stocks, and you're also buying US currency. And what we've seen is that the currency, the INR, tends to depreciate by 2 to 4% every year over the last 15-20 years. So I'll give you an example. 2 to 4% might not be a big number, but actually, if you look at it in numbers, the Nasdaq index, for example, the fund in question, if you look at just the Nasdaq index in the US, over the last 15 years' time, it's actually gone up 6 times. But if you convert this in INR, it's actually gone up 12 times in India. So that is, so I think you're looking at the INR depreciation. So you're buying a US currency, which anyway is a good thing because, increasingly as customers, we are, traveling abroad, we are buying more goods.
Comparative return.
So I think our spending is also in line with the US dollar. So I think it makes sense to have some of that in your portfolio. And lastly, also, and this is something that people also don't realize, but the dividend payments in the US companies tend to be a lot higher than Indian companies. You're looking at close to 1.5–2% dividends every year, which also adds up very meaningfully to your portfolio. So I think if you combine dividends, the US currency as well as US stocks, I think it's a very good value proposition for anyone who's looking to create wealth in investing internationally.
Presuming that the overall portfolio is for about 10 lakh rupees in the mutual fund category, how much would you want the international funds to be?
Yeah, so this is very important. We obviously talked about, wealth creation in the international domain, but actually, one of the key reasons to why a lot of our investor base invest in sort of international funds is actually portfolio diversification. What we've seen is that, Indian markets and US markets tend to move in very different directions. So when you're having a NASDAQ or an S&P or any other international fund in a portfolio, you're essentially getting very similar returns than what you would get in India, but your risk is coming down dramatically. International equity is one such asset class where return is exactly the same or maybe higher, but risk comes down dramatically. So we believe that, portfolio diversification is very important, and international is an asset class that should be there in our portfolio. So we believe that out of the 10 lakh rupees that you're looking at investing, I would say, at least, 1.5 to 2 lakh rupees is something that investors could look at investing in international stocks or funds.
There could be relief in store for those who've taken loans. PNB Housing Finance MD and CEO Girish Koski has, in an exclusive conversation with Business Today managing editor Siddharth Zarabi, said that he sees interest rates dipping by 0.25 percentage point in the next 2 to 3 quarters. The PNB Housing Finance CEO also expressed confidence that the realty sector was reviving. Here's an excerpt.
What's your sense about the forthcoming quarters, and link it to the overall sort of trends that we are seeing in the housing finance market?
The market is quite robust. The real estate space is doing well since last 2.5 years. Immediately after COVID, it started recovering, and I think till now, looking back, in spite of interest rates going up to an extent of 225 bips, the demand has not gone down. There has been, some reports on affordable demand slightly going down, but I think overall it's pretty good. And if you look at this year as well, the industry should grow in the range of 12 to 13%, and we are targeting growth of 17 to 18%. And in terms of disbursement, we are looking at growth of 22%.
What is the impact of the interest rate hike cycle that we have seen almost 14 months? We've seen close to 250 basis points increase in interest rates. Is that impact also playing out in the market?
I think the demand, what we are seeing is net of interest rate hikes and also increase in construction cost. So increase in interest rate and increase in construction cost is deterrent to growth. So what demand we are seeing, what growth we are seeing, at least last year, what we saw for the industry was pretty good. So I think all that is baked in. So now quarter one is typically muted because of the seasonality. Otherwise, the growth is intact.
Okay. What about pricing? Since we are talking about the housing market, how much of that is a issue? We have seen prices go up. Developers have claimed that input costs are partially responsible, and especially in the metros, we are seeing a significant increase. Do you see prices being a factor in the near term? And is there any sense that you get that prices are going to at least stabilize, if not drop?
If you look at the developer business, sale of flats, even that's on the uptick. So construction prices have gone up, but that happened, in last about 12 to 15 months time. So we've seen that last year. So in spite of that, we've seen a lot of developers putting up good numbers. That had an impact. I think even that is absorbed. So I think going forward, at least the price should be stable. I think if everything is where it is, as is, the demand should be pretty robust, and even the developer fraternity will do well in terms of sale. And this is across all segments.
And I just want a broader comment from you on the interest rate cycle that we have seen. There are signs that we could be in an extended pause, and at some point circumstances may push the MPC to even consider a cut. What's your own sense about where the interest rate cycle is placed currently, and what can we expect in the next 6 to 9 months?
I think the rates went up in last 4 to 5 quarters. So now it is a consolidation phase. Maybe for next 2 to 3 quarters, it will consolidate. It will remain where it is. And after that, probably it might start coming down. But I think it will start with 25 bips down. So I think for next 3 to 4 quarters, it's going to be a good story for NBFCs and housing finance companies, because in the interest rate rising scenario and the consolidation stage, I think all the NBFCs and HFCs will do well. So which is little different vis-a-vis compared to bank, but at least non-bank would do well. The interest rate increasing. When I say increase, not substantially, I think to a certain extent, and during the consolidation stage, HFCs and non-bank companies would do well. So I think given that, in that context, next few quarters are going to be really good for the space.
In a scathing criticism of Byju's, one of its largest shareholders has slammed the company. Prosus, which owns 9.6% stake in Byju's, expressed disappointment in the edtech giant's reporting and governance practices. This follows its nominee and that of all key investors quitting the startup's board last month. Prosus said in a statement that Byju's structures did not evolve sufficiently for a company of that scale, and the Indian firm disregarded advice and recommendations from Prosus director despite repeated attempts. Prosus added that its director had quit the board after it became clear that he was unable to fulfill his fiduciary duty to serve the long-term interests of the company and its stakeholders. The Netherlands-based investor had also last month slashed the valuation of the edtech unicorn to $5.1 billion from $22 billion a year ago. Let's also take a look at what's making news in the corporate world. The board of Larsen & Toubro has approved a share buyback worth 10,000 crore rupees. The company will buy back 33.3 million shares at a price of 3,000 rupees per share, a 17% premium on today's close. L&T has also announced a special dividend of 6 rupees per share and said it will invest up to 506 crore rupees in its subsidiary L&T Energy Green Tech. Aviation sector regulator DGCA has removed SpiceJet from its enhanced surveillance regime. DGCA had put the low-cost carrier under enhanced surveillance recently after it was facing multiple financial headwinds in recent months. Various lessors were seeking reposition of aircraft leased to SpiceJet, and some of the cases have been settled by the airline. Airtel's B2B business has reached a milestone in the Internet of Things space, becoming the first enterprise to achieve the feat of connecting over 20 million devices. According to a report by Frost & Sullivan Data, Airtel's B2B division commands an impressive 54.3% share in this market for FY23. The ITC share, one of the star performers on D Street, has slumped 6%. 2 days after its board gave an in-principle approval for the demerger of its hotel business into a separate subsidiary. The fall was steeper yesterday, with what analysts are saying has been profit booking by investors, and also because existing ITC shareholders may not get one ITC hotel share for every share held in the parent company. But does this mean the end of the year-long ITC rally? That's the big question. BTTV Sakshi Batra spoke to market analyst Hemang Jani to find out.
We've seen the stock has dropped about 7% in just 2 days after the hotel demerger news was announced. And that's after, the stock inching extremely close to that 500 mark as well. And after that, the sell-off has happened. Is the demerger that bad that the markets are reacting this way? Or is this just profit booking or a sell-in news kind of a reaction?
Yes, the stock had run up quite a lot. And the demerger was something that was going around, and market was expecting that. But I think the structure that they have chosen to demerge, wherein the ITC will own 40% and the shareholders will, own 60%. some investors are not happy with that structure, though the final details will be known only on 14th of August. But this development surely has kind of created a little bit of disappointment, stroke uncertainty about how exactly things are going to pan out. There could be some amount of negative reaction because of the possibility of a holding company discount once ITC carves out the hotel unit from itself and lists separately. So it's a short-term pain that the stock is going through. I think when you look at on an overall basis, I don't foresee any major negatives in the core business. That's doing pretty well. Hotel business after a long time is showing good traction. So use this correction as an opportunity to buy, because anyway the stock had run up and investors were waiting on the sidelines.
Okay, but in the long term, would you say that there is value creation and value unlocking that can happen for the ITC shareholders, those who are still holding the stock?
Surely, as we all know, ITC has 3 to 4 different verticals. The consumer business, the cigarette business, the paperboard, agri business. So the only concern is that the structure which the management has chosen, would they be opting for a similar structure for the other businesses also? We do not think so at this stage. And there is enough value across all these, verticals. So we are extremely positive on ITC from an investment perspective.
Okay, but would you see this as a precursor to the other verticals also to getting demerged going forward?
So that surely will be there on the mind of the investors, as at the end of the day, each business, depending upon what unlocking it can bring to the shareholders, people do focus upon that. But the timing of that and the structure that the management chooses will be different. Overall, we are quite positive on the sum of parts basis, and depending upon finally what final details are out, we'll have to basically look at it separately.
That's where we leave it on the show tonight. Thanks so much for watching.